Hey, this is Troy Stavros with the Troy Stavros team at Doorbell Real Estate, and today I want to talk to you about not believing everything you read, specifically in regards to real estate. Now, that statement could hold true for a lot of other things, but today we're going to talk about real estate and talk about the truth that many of the headlines are overlooking. There's a lot of questions right now regarding the real estate market as we head into 2022. The forbearance program is coming to an end and mortgage rates are beginning to rise. With all of this uncertainty, anyone with a megaphone, from the mainstream media to a lone blogger, has realized that bad news sells. Unfortunately, we'll continue to see a rash of troublesome headlines over the next few months. So to make sure that you aren't paralyzed by a headline, make sure you turn to reliable sources for a look at what to expect from the housing market next year. Now, there's already alarmist headlines starting to appear, and here's two recent topics you may have seen in the news. The first one, foreclosures are spiking today. Now, there's a number of headlines circulating that call out the rising foreclosures in today's real estate market. Those stories focus on an overly narrow view of that topic, the current volume of foreclosures compared to 2020. They're looking at 2020 versus 2021. Now, they emphasize that we're seeing far more foreclosures this year compared to last. Now, that seems rather daunting. However, though it's true foreclosures have been up over the 2020 numbers, it's important to realize that there were virtually no foreclosures last year because of the forbearance plan. If we compare September, this September of 2021 to September of 2019, which was the last normal year, foreclosures were actually down 70%, according to Adam Solutions. Now, Executive Vice President of Adam, Rick Sharga, recently said this: as expected, now that the moratorium has been over for 3 months, foreclosure activity continues to increase, but it's increasing at a slower rate, and it appears that most of the activity is primarily on vacant and abandoned properties or loans in foreclosure prior to the pandemic. So homeowners who've been impacted by the pandemic are not generally the ones being burdened right now. That's because the forbearance program has worked. Allie Harrelson, president of auction.com, explains that the program has done a remarkable job. This is what he said: the tsunami of foreclosures many feared in the early days of the pandemic has not materialized, thanks in large part to the swift and decisive foreclosure protections put in place by government policymakers and the mortgage servicing industry. And the government is still making sure that homeowners have every opportunity to stay in their homes. Rahit Chopra, who is the director of the Consumer Financial Protection Bureau, issued this statement just this past week. Failures by mortgage servicers and regulators worsened the impact of the economic crisis a decade ago. Regulators have learned their lesson, and we will be scrutinizing servicers to ensure they are doing all they can to help homeowners and follow the law. So, there you go. Foreclosures, you might be reading about them, but that is the truth. All right, second thing you might be hearing about are rising mortgage rates and how they're going to slow the market. Now, we always are hearing news about rates, and that topic is generally generating frequent headlines regarding the rise in mortgage rates, and they are rising. Some people are expressing concern that rising rates will negatively impact the housing market by causing home sales to dramatically decline. The resulting headlines are raising unneeded alarm bells. To counteract those headlines, we need to look at what history tells us. Looking at data over the last 20 years, there's no evidence that an increase in rates dramatically forces sales to come to a halt, nor does home price appreciation come to a screeching stop. Let's look at home sales first. The last 3 times rates increased, shown in the graph in red, sales, depicted in blue in the graph, remained rather consistent. It's true that sales fell rather dramatically from 2007 through 2010, But at that time, mortgage rates were also falling. So the next two instances show no meaningful drop in sales. Now let's take a look at home price appreciation. Again, we see that a rise in rates didn't cause prices to depreciate. Outside of the years following the crash, prices continued to appreciate just at a slower rate. So there's a lot of misinformation out there. If you want the best advice on what's happening in the current housing market, feel free to give me a call or one of my agents, and we will be happy to help you, or just continue to watch this channel as we'll continue to put information out there. We just want to make sure that you are armed with the best information so you can make an educated decision as to what you want to do and what's going to be happening with what is most likely one of your biggest investments, your home, or something that you're going to purchase, a home. So let us help. We're here to help you, and we hope you are having a great day. We will talk to you soon.